carnage on Wall Street now that U.S. President George Bush is defending his government's plan to spend hundreds of billions of federal dollars to shore up shaky markets. The bailout is raising a new set of questions this weekend, and financial analyst Michael Campbell joins us now to talk more about that plan. Michael, there are concerns this is further going to burden the U.S. taxpayer.
Oh, I don't think there's any doubt of that. I mean, they're talking in the initial stage $700 billion, but the real question was this. I mean, can it return some level of confidence to that system? Keep in mind, on Thursday, for example, people were taking their money out of money markets and such en masse that it literally was an erosion of the confidence in the system. What the government's trying to do is say, hey, don't worry, your financial institution is safe. Why? Because we're going to take all their bad mortgage and mortgage products into a separate entity, thereby stabilizing the system. That's all they're trying to do at this point. It does not get the U.S. economy out of the woods in any way. In fact, I think the U.S. economy is in real trouble for the next year or more.
And that could have an impact here. For those who don't have an economics degree, explain, if you can, how Canadian investors are impacted by all of this.
Well, so many different areas. Let me just be very quick with this. 2/3 of economic activity in the States is consumer-driven. They're our major customer. Their consumers pull back. That hurts our export business that's already in pretty rough shape at this point. We'll feel it that way. Secondly, I think we'll see lower interest rates in Canada and the States as we come up. Why? Because the economic activity is still going to be burdened. This did nothing to rescue the economic activity in the States, and again, that impacts us. Canadian investors already felt the heat. We went down along with Wall Street, but we had a big recovery Friday, as did they, as confidence starts returning to the system. Canadian economy is in much better shape than the U.S. Our banking system is superior to the U.S. right now in quality. So longer term, we're going to be okay, but it's not going to be without these short-term disruptions, and the sort of salad days that we experienced 2002 to 2007, I think, are over. The resource sector takes a little bit of a hit here as things quieten down, but again, Canada's okay, just not as rosy as it used to be.
I know that nobody can see the future, and Monday is still a mystery, Michael. But what's your best guess what we're going to see on the markets on Monday?
I still think it's a return to confidence, but at some point we're going to have people who are in bad shape and they borrowed too much money to be in the stock market. They're going to sell into it, whether that starts Monday or Tuesday. I'm pretty sure we're going to see some of that coming up very shortly as people try and get their portfolios back into a little better, healthier shape when it comes to their positions versus their personal debt.
All right, Michael, thank you very much.
Okay.